Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, December 6th, 2010. Well, folks, an extremely quiet day on Wall Street. The markets are flat to slightly lower today. Dow is down a whole 5 points, NASDAQ is down a whole 1 point, and the S&P 500 down about 1.75. So again, an extremely quiet Monday. Not surprising to see. Friday was a very quiet day with a little bit of a Federal Reserve push towards the end of the day. You can clearly see that right here. Again, the market was trading flat all day. Federal Reserve comes in and says, listen, we want this market to close higher on Friday. Let's push it up. Market starts out, really negates that at the start of the day, right back down. Volume extremely light. We have only done 58 million on the day today. Honestly, I think we could have our first day in a long time at around 100 million on the SPY, which would rival the lightest trading day of the year. That's what it is, folks. Bottom line, you have to recognize the fact that the market right now is back on the quiet side because Europe is quiet and Asia is quiet. I said this and I'll say it again, and we've been nailing this market nonstop with trades. Probably the best last 2 weeks have probably been the best trading in a couple months, if not in a quarter or two, in regards to swing trades and day trades. It has been fantastic. And again, you get that by joining the Research Center or the Intraday Stock Chat. But bottom line is this, folks. As long as things are quiet overseas, this market will remain quiet and propped up. There's no way the Federal Reserve will let this market fall if they can help it. The only way they cannot help it and let the market or keep the market up is if you have that issue over in Europe or in Asia reemerge. So again, expect that in my opinion. That's my bias. I've had this bias now for 2 weeks, ever since the market was dumping out, which is amazing if you think about it here. Down here, everyone's freaking out. Oh, what's going to happen in Europe? What's going to go on? This is the 60-minute chart, by the way. These are, going back to mid-November all the way to late November into Thanksgiving. And I said, hey, listen, as soon as things quiet down, this market's going back up. And in fact, it could go to new highs. And sure enough, what did we hit on Friday? We hit new 52-week highs on the SPY. It's just simple logic. You have to understand the manipulation in the market. If you don't understand it, then you're going to be losing money. And again, we've gone over this in, day out in the Intraday Stock Chat as well as in the Research Center. It's the discipline of trading to understand the key moves. All right, you have to understand all sides of the coin, and again, that's the key. So, a couple good trades today. It's been a little quiet day today so far because it's a Monday, but one I posted up in the Research Center today, which was a no-brainer. The XING. This was on the back of a sympathy play, gave it out at 183. 183 to the Research Center. Again, it's trading at 195. And again, I do expect it to get above $2 today, and that's the target area. So right around 205 or so, give or take. That is the overall area. Look at the beautiful consolidation pattern. You have a little bit of a triangular pattern here that I pointed out in the Research Center to people. And even on the blog, we put it out afterwards on the blog so people could see it as well to get a sense of how good we are at doing what we do here. And this is a perfect example. Beautiful move in this, and again, beautiful move to the upside. It's on the back of SHZ. Take a look at SHZ, basically from $2.30 all the way to $3.95 today. And also, you could take a look at CHGS, which I gave on Friday to the Research Center. Actually, I think I just gave it to the chat room on Friday. And again, we all bought in right here around this 140, 145 level. It ran all the way to about 165, 170 on Friday and has continued up beautifully today. So the trades are there. You just have to be disciplined. And again, that's where we come in to try and help you be disciplined via the Research Center and the Intraday Stock Chat, and that's where it's all at, folks. The money making continues. I probably had, again, as I said, had the best 2 weeks over the last 2 weeks in a long time, and we'll continue to watch that, all right? Now, let me see if there's anything else I want to mention. Overall, again, market seems to be mostly flat. Let's go back to the intraday SPY. I mean, look at the trading today. Volume is just dead, getting even lighter as we speak. We've done 58.5 million on the SPY. Market's been in basically a 30-40 cent range, actually exactly a 40-cent range from the high to the low today. 122.90 high, 122.50 low. And again, if you break up towards the end of the day via the Fed pushing it up, then you look for a pivot top right here to break it out through that. Ultimately, 124 to 125 is probably pretty likely over the coming 2 weeks into the Christmas season based on the Federal Reserve and the POMO that they continue to do day in, day out. As long as the volume remains light, as long as things are quiet in Europe, expect this market to be neutral to positive in my opinion. All right. Over a couple different stocks. Technology seems to be doing all right today, at least the name brands. You have Apple Computer up $2.40, although it is off the highs of the day. Amazon's a little on the weak side flat, but Google's having an okay day up $4.70. Groupon, again, the $6 billion buyout of Groupon. Groupon saying not so fast, we're not accepting that bid, essentially. I think that's helping as the Groupon bid did drive down Google's price based on, obviously, them paying it in cash and so forth. So nonetheless, that's helping Google a little bit today, although it is off the highs as well. Goldman Sachs Max, JP Morgan flat, Chevron, Exxon flat. Again, market extremely quiet in this sense. Now, a couple other things I want to go over here as we go in towards the rest of the last couple, periods here. We are looking overall at a market that continues to be really on the kind of upside swing. And again, small caps seem to be where it's at right now. There's a lot of good small cap movers because that's where speculative money runs to last. So again, I showed you the XING. We had the TORM. There's a couple other trades that we're up on, down on in the small cap realm as well. But they all seem to be getting that underlying bid. And a couple ones that I want to keep an eye on. SNSS is a good little biotech play here. It's already had a move up today. I'm not saying this is a good one, but you can see a nice little start, good consolidation. This could be a breakout candidate if it gets through 40 cents today. Another one I like is PARD, low end of the chart, trading below cash on Ponyard Pharmaceuticals. These are some of the last bottom fishing ones that haven't gone. Eventually, you do anticipate them going. So again, I will be keeping a close eye on these, and we'll see again how it plays out. All right. Let's see if there's anything else here on my watch list. Intel is up a couple pennies, not really doing much. Cisco's having a good day after Oppenheimer upgraded them, and we see them actually shooting up on Cisco finally. Cisco's taking a big beating, but it looks like it finally may have put in a short-term bottom down here. It does look cheap to me. It does look cheap. You have the 20 moving average, which will act as resistance at this point in time. And again, we'll watch to see how that plays out this afternoon. All right. I continue to think the retailers will probably pull back more as we get closer to Christmas and into January. The retailers have been on an amazing tear lately, but you have to say to yourself, if you look at Tiffany's, it's just too extended. It's gone up too much. This is up well over 50% off the 3 months ago lows here, going back to about September. So September, October, and November. Now we're in early December, and this thing is up over 50%. My thought process is this, is that retail sales expectations are as high as they can be. It's almost impossible for us to go above those in real sales, so it's mostly priced in at this point. And other ideas here as well, you can also make a case that because the wealthy go to Tiffany's, the wealthy go to Coach, those stocks, there could be some people not buying Coach and Tiffany's as much until we get more information on tax cuts. So it could be a little bit of a disappointment coming in the next few months on those two stocks. So I wouldn't be surprised. I'm not thinking a big pullback, but you're looking at a pullback maybe over the next month of $5 to $10. Maybe not even. $5 on Tiffany's would be a nice solid pullback and a very good possibility. All right. Overall, continue to have that neutral to upside bias. We've been nailing this market nonstop. Webinar this weekend was fantastic and great. We continue to turn out some amazing traders and investors as they take the webinar. And again, the next one will be in early January. You can find it on the website. Come join the Research Center, get the plays, get the new trades We're putting out every single day some new trades almost, and that's the bottom line. They're profit making. I think we're hitting about over the last 2 weeks, probably about 90% on our trades. So that's unbelievable, unparalleled really in any area of the markets, even hedge fund land as well. Take care again. We'll see you in the Research Center this evening. Take care.